Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Friday, September the 10th, 2010, and like we do every night, it's time to look at the markets. Okay, today let's start off looking at the NASDAQ. Okay, this guy is a mess, total mess. Let's move up here. You have a gain of 6 points for the day, ultimately flat. The main thing I want to point out here, a couple different things, a lot actually. First off, the volume behind the advance to the upside, bad, all right? Very, very low volume, not something you want to trust. And if it's very low volume, it means nobody with any money is really buying. This is just retail guys out there buying. We've seen this before here. Yes, that failed. And here, yes, that failed. And here, yes, that failed. Okay, so this is another one of those situations. We've already seen this repeatedly. You'll also notice consecutive series of lower highs. Lower high here. Let me point these all out. Look at the tools. Man, that's not a tool. That's a brick. Hang on. Grab that. Yes, there we go. High point. Lower high. Lower high. Lower high. Lower high. We're in a confirmed downtrend. Yet there's still people out there looking at this as a potential buy at the upper Bollinger Band line resistance area, at the resistance of the 200-day moving average. Right there, there. All right, and you've got this previous high here and right there. Yeah, just like that. Okay, this previous high, draw a line across to this previous high, and you find that's what you're bumping up against right now. Multiple lines of resistance, no strong volume behind the move to the upside, and count them. 1, 2, 3, 4, 5 gaps below you. Typically, you don't get more than 3. You got 5, all right? It's just nasty. You don't want to be a buyer of this. I don't care. Even if you were a bull, wait for a better opportunity because that one's nasty. That's a trap, and you don't want to be messing with that. Also, the MPT rating came in at 03 for the day. That means smart money is selling this guy. That's right. They're not buying it because it ain't going anywhere. If you get a move to the upside in the market here, you're going to get yourself another one of the situations we talked about earlier this week. It's called a fool's rally. Back here, you had all the telltale signs of a peak. You had the inverted hammer, you had the overbought conditions, etc., etc. The divergences, all the stuff you wanted to see was there. And for a couple of weeks, you moved to the upside, and people thought they were getting away with something for a couple of weeks, and then you got the flash crash. And how many people got caught right here? A bunch of them. None of us, because we were shorting it. Here you were, again, you had the same conditions, low volume, bounce up here, resistance level, all that stuff, and then she just started fighting for 3 weeks. People thought they were really going to do something, make some serious money, even though all the conditions were telling them, leave it alone. Of course, we didn't do that. We shorted it, and we made money. Here we are again, all the conditions exactly the same. You want to move to the upside? Go for it. I'm waiting. I'm going to make money. You're either going to make it or you're going to lose it. Don't find yourself in situations that you know the chart's telling you to leave them alone. They're telling you to leave it alone for a reason. It's not a quality opportunity to go long. Quick look right here at the slow stodge. When she's up above the 80 line, right there, you need to be leaving it alone. Don't be going long, all right? Right there, yeah. Right there, yeah. All of that time frame. And now, okay? The chart never lies, all right? It's buy and sell pressure. The chart's reading that to you, telling you that information. If you trust your chart, you're fine. If you break the rules, you're toast. Just in case I've not given you enough reason to really not like this quote-unquote September rally, I'll point out one more thing. As you run up here, you'll notice this little indication right there. Spinning top, okay? Or you can call it a doji. Either way, whenever you see a move up to the upside like that, and you get those up there, it's telling you that momentum's no longer there. You look for the rollover. Back here, same thing, right there. Rolls over, okay? At the bottoms, they spin the other way. Boom. And then today's activity, another doji or spinning top, whichever you prefer, and down they go, okay? Quick look here at the Russell 2000. This one is the same situation. A lot of guys are looking at this pattern right here to move to the upside, and then this little flag pattern kind of thing going there saying, hey, it could break out to the upside. That could be bullish. Well, that's ultimately the same thing as trying to catch a falling knife. Why? Because you've got a series of lower highs. This is in a downtrend, okay? When it's in a downtrend, you don't want to be trying to go long. You're working against the trend. The trend's your friend as long as you use that in your favor. So if it's in the downtrend, look for short opportunities. And how do you do that? You wait till the slow touch gets, oh, that's right, overbought, and then you look for those opportunities. If the market does, for whatever reason, and it can, make a fool's rally up to the upside, that's fine. Use it as a short opportunity, like you would back here, made money, like you would have back here, and you made money. Okay? Cool. Quick look here at the Hang Seng Index. You'll notice you've got the hangman or hanging man candlestick formation, which is a sell signal. You've also got the overbought condition of the slow stop. Trying to look for more selling, look for short opportunities. You've also got this bearish divergence. You want to use this bounce, or I should say bearish setup. Use this bounce right here as an opportunity to find shorts. You'll notice last time you were up to the upper Bollinger Band line, forming those same pattern, same candlestick patterns. Same situation right here. There's nothing, there's no reason to be a bull here. It doesn't matter what price does. If price goes higher, it's only temporary. It can't be sustained at those levels. So you shouldn't look at just price. I keep getting people that are novice at this stuff, and they look at this and they say, yes, I see all the signals are saying be a bear, but the price is going higher. Well, that's the same psychology, the same rationale that was used prior to the 1929 crash, prior to the dot-com bubble, prior to the 2008 crash. Just because things go up doesn't mean it's a good idea to buy it. All right, if you're going to find an opportunity, you want to be a bull, but find a good opportunity to do so. Don't chase stocks. That's just silly. Quick look here at the Dow Jones Industrial Average. Finally closed after 3 days of working on it. Finally closed above the 200-day moving average. We've seen this before. Not really that big a deal. The main thing to point out though is it can't sustain it. It hasn't been able to do it any of this time. Why? Because it's in a bear market and price stays below the 200-day moving average. All right, that's an easy little point to point out. So you can move more to the upside. That's fine. You're going to have the same resistance levels that we talked about already. You're going to have one here. You're going to have one at that upper Bollinger Band line. Another previous high here. Another one at the previous high here. Okay, that's all the levels of resistance you need to be concerned with. And again, you've also had, if you keep count, 1, 2, 3 consecutive days to the upside. Once it's had 3 days, I like to start keeping count of that, because if you end up with 5 or 6, you're above average consistently to the upside, and that means you end up selling off. Okay? Yes, awesome. Okay, quick look here at the FTSE London Financial Times Index. This one makes absolutely no sense, and you know it's going to break down anyway, but we'll look at this in a couple different ways. First off, if you go back here, you can't see it on this chart, but if you go back a little bit, there was a low point back here. We rallied up off that. It was about this level. I can't really get there. There we go. We rallied up here, more like this, and then we got shot down because of all the problems in Europe there. Greece, Spain, Portugal, the Europe issues, the Euro crisis there, that brought us all down. During this time, we've learned about more problems, and we've seen these countries get downgraded even further, which increases their cost to do business in the marketplace, so forth and so on. So it puts more strain on them. You've seen a lot of fundamental stuff out there get even worse, and yet now people want you to believe that we're going to rally up here and go back up here to this level. I got a question. You rallied up here earlier, you got shot down because of those fundamentals, and now you're going to rally up here with those fundamentals still in play and now worse than they were? Yeah, I don't think so. Look at the RSI. Quick look here at the RSI for the FTSE. You'll notice you're at 65.61. At 70 or higher, you're extremely overbought. The RSI says you're overbought. You are overbought. So when you hit 65, you got 5 points to the upside, and you got to come down to the 30 line before you even consider yourself oversold. So you want to move to the upside? Go for it, FTSE. Get up there above 70 and I'll nail you, because anything that's up there above 70 can't be sustained. And I almost forgot to mention, boom, above the 80 line. You need to be looking for short opportunities, not long opportunities. If you are long, you need to keep a tight stop. Okay? If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, please refer a friend. Also, all week long, I've been posting video after video after video on the free website, all kinds of technical analysis stuff there for you to learn about, from candlestick analysis to tons of different stuff out there. Okay, and I'll be doing it all month long, so it's going to be a really good library of video tutorials on technical analysis, how it works and why it works, all kinds of cool stuff there. A quick look at our disclaimer. Wait, before I go look at that, I need to thank everybody for your guys' support of this free service. You guys have been referring your friends, subscribing to our YouTube channel, sharing our videos online, Twitter, MySpace, all over the internet. And because of that, last week we actually broke, this week I should say, we broke every one of our traffic records again. Thank you very much for that. Let's keep working our tail off for you, and you guys keep doing what you're doing. All right, quick look at our disclaimer. The disclaimer, read it and weep. Awesome. All right, for those of you that don't know, we are already this week, we started our September live trading course. You can go to our free website at perfectstockalert.com, learn about that. We're taking some new trade opportunities, both long and short, and our top picks. You can check that out as well. And God bless, take care, enjoy your weekend, and I'll see